we're in a deep deficit with silver where we don't produce enough to satisfy the industrial and the investment demand. So the price has to go up from here to allocate the available amounts of silver. And that's great for the stackers and the other people who have been loading up on silver and the mining stocks and everything going forward. It's great, really great for the miners because their costs aren't really going up that much, but the price of what they're selling is going up, which really widens their profit margins and gives them massive new cash flow. And so one thing that's interesting right now, if you want to learn a little bit more about silver and get more plugged into it, start looking at the miners' earnings reports, which are coming out now, starting soon and running through the month after that. You're going to see the gold and silver miners produce earnings reports for the fourth quarter of 2025, in which they show massive increases in the price of gold and silver and a massive widening of their profit margins and a big increase in cash flow, which is the definition of a healthy company. When your profit margins are widening and your cash flow is growing, you're a really good company, the kind of stock that people want to own. So what we'll see in the coming year is the miners making a lot of extra money and then using that money to improve themselves. They'll pay off their debts, they'll increase their dividend, they'll buy back more shares. And the smartest of them will make really well thought out acquisitions, not just empire building things where they buy at random to get bigger, but transformational acquisitions where they'll buy either an exploration company that has potentially a tier 1 asset or a junior miner that has proven that it can produce at an acceptable cost on a big scale. That also moves the needle for a big miner. Those kinds of acquisitions turn good large producers into great producers. And we'll see a few of those too. And the people who own those stocks will make a lot of money.
According to John Rubino, we're in the early stages of a monetary crackup boom. Fiat currencies are collapsing under debt, AI is about to trigger mass layoffs, and a gold standard reset is inevitable. He says own gold and silver now, because those who don't will lose 2/3 of their wealth. Thanks for watching. Give a thumbs up and subscribe to Fine Metals for the latest insights.
Gold and silver and most other commodities will go up as long as we're on the current track. As long as by we, I mean most of the major countries of the world, are borrowing way too much money because we're overspending. And then the interest on the debt that we're accumulating goes up, which leads to higher debt next year. As long as that process is going on, then you want to own gold and silver because some of the capital that is thrown off by all that borrowing and soaring debt, et cetera, that's going to flow into real assets. And you're seeing it now around the world where central banks are now the biggest buyers of gold. And right up there with central banks, there is at least one crypto company, Tether, which is buying central bank levels amount of gold in order to create meme coins, or no, it's not meme coins. Stable coins, sorry, to create stable coins, which is another way for gold to circulate in the financial market. And if you've got crypto money and central bank money at your back, as gold and silver do right now, then that's a pretty powerful tailwind. That's the kind of thing that almost guarantees your price goes up. And so far, that's what we've seen, that the central banks are buying regularly without being very price sensitive. They have a target in terms of tons rather than dollar value or anything. And they're continuing to buy gold. And Tether and the other crypto guys recognize that gold works really well for their purposes too. It's an asset that you can put into a vault and that you can tokenize and have it trade on a blockchain. And somewhere along the line, you make a lot of money in that process. So as long as you've got those guys out there doing what they're doing and not being very price sensitive about it, then gold and silver will tend to see a lot of buying pressure and continue to go up. So I think it continues to be a really good market for precious metals. And it's getting volatile now, which is going to shake out a lot of the non-gold bug money that's flown into it lately. Because over the past year or so, you've seen a lot of generalists start to view silver in particular as an asset that they can speculate in, and as something that they can buy in the expectation that it's only going to go up forever. We started an experiment in 1971 in which we left the last vestiges of the gold standard and basically gave every major country an unlimited credit card in the form of a monetary printing press. Humans being what we are, they abuse that privilege massively. Almost every major country is now really deeply in debt, and they have no choice but to create a lot of new currency to manage their debts. And that's impacting the value of the currencies, which in turn is impacting the value of gold and silver when priced in those currencies. Because, if your government is actively inflating away your currency, we've had 3,000 years of experience with that. And what happens every single time is that people move their capital into real money like gold and silver and other real assets like farmland and energy assets, things like that. That spikes the prices of those things in the local currency and leads to the collapse of the local currency at some point. So that's called a crackup boom in the Austrian School of Economics. And what I think is happening with gold and silver now is that we are in the early to mid stages of a crackup boom. And that's leading capital to pour out of financial assets and fiat currencies and into real things. And gold and silver are the big beneficiaries of that. So regardless of what's happening today with Russia and everything, I think gold and silver are what will continue to be beneficiaries of this longer trend that is only going to end with a monetary reset. So we're going to stay on this course until the decline in the major currencies becomes so unmanageable that the major governments of the world start seeing a return to the gold standard or some other kind of monetary reset as the least bad option. And I think we're not that far from that, because the decline in these currencies, as measured by gold and silver going up, is accelerating. And it's going to lead to extreme instability unless somebody does something pretty soon. The odds aren't good that we're going to see the light and that voters are going to put up with the kind of monetary reset that it would take and all that. It's a really difficult process. But the least painful way is some kind of monetary reset where we go back to some semblance of the gold standard. But doing that impoverishes everybody who owns a lot of dollars. So that's the problem with going back to a gold standard, is that every citizen with a bunch of dollars under the mattress or in a bank account or a bunch of government bonds in their retirement fund, they lose out big time. A monetary reset and a gold standard back to, say, $10,000 gold, which is to say the dollar is 1/10,000th of an ounce of gold, that makes your bond funds 2/3 less valuable. And we'll have to see what people do when that happens. Most of them won't be happy. And so now we're pursuing the same policies that led to that burst of inflation, only we're doing it on an even bigger scale. So it won't be long before inflation picks back up again, which is to say the value of currencies starts to fall in a disorderly way. And then the game ends. The fiat currency experiment, which started in 1971, will finally end. And hopefully it'll end with a monetary reset that puts us back on a sustainable, organic growth path. Or it'll end with a gigantic financial crisis like Weimar Germany, where over the course of just a couple of years, everybody gives up on the currency. Its value falls by, 100% because it's replaced by another currency. That's also possible. So we'll just have to see just how dumb the guys in charge of the system are right now, because we know they're reasonably stupid. But are they suicidally stupid? enough to just let this thing run until it blows up on its own before they intervene, losing out in a massive way to AI and having to fire a lot of their people. Amazon just fired, I don't have the number, I don't remember, I think it's something like 12,000 people. But it wasn't warehouse staff, it was corporate staff. So, and they attributed it to AI being able to do a lot of what mid-level managers currently do. And that's just the whole AI thing. Give it a few more years. And the Amazon experience with mid-level managers is going to be spread all the way across the economy, leading to just layoffs on a scale that has never been seen before. And that's one more wild card out there among a lot of wild cards. And we really don't know how it's going to play out. Nobody does. Even the guys running the AIs are just giving probabilities now, 40% this, 60% that, 10% maybe this other thing, and nobody really knows. So this is one of the trickier stretches of human history, just in general, and doubly so in the financial markets. Well, the way the dot-com bubble worked was it got massively overinflated. Then there was a huge crash. And a lot of the major companies in that space went down by 90% or more, if not 100% in a lot of cases. But the internet went on to dominate the world. So I think it's probably the same thing with AI. These AI stocks are they're being elevated by extreme optimism about what new products and services they can bring out with their AIs and how much money people are willing to pay for it and everything. Highly unlikely that most of them end up making the kind of money they need to justify their current valuations. So, AI is obviously going to be incredibly consequential and, might spell the end of the human race. Who knows? We'll find out in the next decade. But that doesn't mean all the companies in that space, or even most of the companies, are going to do well in the future. And if a few of the bigger players don't do well, then that'll crash that section of the market, along with a lot of other sectors. So I think that's probable, that we have some kind of a massive repricing in the AI space that is catastrophic for some of the companies there, but that AI goes on to be a very, very big deal in the future. So, the short-term risk in all of that is that AI tanking pulls down the rest of the stock market, which pulls down the economy. We get a big recession. That whole thing is very, very possible. Again, if you look back at the dot-com bubble, it burst in 2000. We had a massive recession for the next 2 years. Very possible that something like that happens again. And a lot of those guys would be shaken out if silver dropped back down to $40 an ounce or something, which it absolutely could. Bull markets have, by their nature, really brutal corrections. And so you really have to understand what it is you're buying to maintain confidence in something if it drops by 50%. That's what a lot of the real stars in the precious metal space, and investing in general, have kind of a variation of a saying that goes something like this: you shouldn't buy something unless you'd be comfortable with it dropping by 50%. Because if you're comfortable with it dropping by 50%, that means you understand it well enough to know what its true value is, and it's higher than the price after it drops by 50%. So you would be buying more at that point rather than freaking out and selling everything. So when you have volatility like we're having now in precious metals, excuse me, it tends to shake the weak hands out, people who don't really understand why they're there. And the buyers from the weak hands tend to be strong hands, people who do understand what they're doing and who have no intention of selling at the price where they're buying right now. So I think that kind of a consolidation is reasonable for precious metals, especially silver, because they've had such great runs, So you don't get the great run like that without a big consolidation and lots of corrections and things. And today, that's one of the things we're seeing.